And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, the whole enchilada. It's the Lance Roberts Show, presented by Clarity Financial. It's life, money, and sweat equity. Now, welcome in to the Lance Roberts Show.
And we're going to get there in just 1 second. Hold on. There we go. And welcome to the show. Today, I'm your host, Lance Roberts. And, of course, this is the Thursday edition of the Lance Roberts Show right here on the Voice of Texas, talking a little bit about you and your money, of course, today, as always. Let's talk about the market wrap because, well, you know, it is an all-time high right now for the markets. And, in fact, after we broke out of this, January high, which was back in August 27th, we talked about increasing exposure to portfolios. But we had mentioned at the time, because when we first broke out, we said, hey, the markets are overbought and that you need to kind of wait for a little bit of a pullback in order to add some equity exposure. We did get that here recently. We got a pullback around the 10th of September, came down, retested that breakout high that we had seen from earlier January, and then started rallying from there. Well, today we have now broken out to new all-time highs. Everybody get out your party hats. The Dow at a brand new record, the Nasdaq's at a record. We had said this was likely going to be the case in several of our articles we've written over the last couple of weeks. There's just this willingness right now. The markets want to get to 3,000 on the S&P 500. It's a big, fat, round number. We like that. The Nasdaq had already broken out to all-time highs, and so when one index breaks out to an all-time high, traders kind of start pushing the markets in conjunction with that to get all the markets up to all-time highs. Well, today we did that, so everybody get out there. Dow 26,000, 27,000, whatever the number is today or tomorrow will be. Dow 27,000 right around the corner. Dow S&P 3,000 just 70 points away. So, we're going to try to get there, and that's just the real impetus here for the markets. A lot of momentum in the markets right now, a lot of optimism in the short term. But I do want you to take this with a grain of salt, because even though we're breaking out to all-time highs, which, this is a good thing, and again, I don't want to take away from the fact that the markets are breaking out to an all-time high, you also have to ask yourself a little bit of question here, because the markets are completely discounting now a lot of internal factors that, well, we should be paying probably a little bit more attention to. And one of those is, of course, rising interest rates. Interest rates are now up at 3%. Historically, that's increasing borrowing costs. The Federal Reserve is raising rates now in the environment. That's tightening monetary policy. And we've got tariffs and trade wars that are kind of going on around the world. Those are continuing to escalate. Now, that's going to impact earnings. Now, this rally, really, that we've seen since the January lows, which has taken basically 9 months to get here, the problem is that a lot of that's been based and predicated upon stronger earnings growth because of tax cuts and stronger economic environment, et cetera. Well, the problem now, or the issue is that with rising interest rates, the Fed hiking rates, tariffs are going to impact corporate profitability. Higher labor and wage costs are going to impact profitability for corporations. The risk is, over the course of the next few months, is going to be a disappointment in earnings and earnings expectations. Earnings expectations are already coming down, but if companies start to report, more drag from tariffs, et cetera, America's agricultural farmers are already complaining very much about tariffs. We've already had several big corporations talk about the potential impact of tariffs to their business, particularly on the basic materials side of the equation. So if we start to have some disappointment in earnings with a market that's very elevated right now, that's going to be problematic for investors. Now, I'm not telling you not to worry about I'm not telling you to worry about this right now. The momentum here, very positive, breaking out today. Everybody's excited. And again, that, optimism begets optimism, momentum begets momentum, which is why we every time that we have broken out in this market, ever since April, we've been adding exposure to portfolios. We just did that here recently, back on the 11th of September. That's been increasing in our portfolio value. So all of this is good, and we're we're 100% exposed to the markets right now. Our portfolio is fully allocated here, but we can't take our eye off the risk. The things that's going on here internally that that we need to pay attention to is, despite the fact that we've had this really great rally in the market, only 4 sectors have been driving this market rally this year. Technology, discretionary, staples, etc. Those primary sectors are the ones that are lifting the markets. Of course, technology being almost 26%, it's 1/4 of the entire index. When the technology sector rallies, well, so does the rest of the market. And of course, as of late, technology's kind of been lagging here a bit. Apple, Microsoft, etc. have been really kind of dragging their weight along here. Well, that actually has changed over the last couple of days. Google has actually started getting a nice rally here. That's helped lift the markets. Take a look at Amazon. Amazon had a decline here, looking to bottom, starting to turn up. On news that they're going to open up 3,000 convenience stores. They're going to compete with 7-Eleven now, apparently. Apple turning up today as well. So really, wherever you look, we saw technology rallying today after having been pretty oversold here over the last couple of weeks. In particular, some of the big ones have been under pressure. Starting to see some money flow back in there today. Of course, some of the semiconductor stocks have also been rallying well. Micron has been rallying here over the last few days. So has KLA-Tencor, had a nice rally today. But those stocks, the chip stocks, have been under a lot of pressure here because of concerns over memory issues going into the end of this year. Of course, one thing about memory issues that you need to be aware of outside of Alzheimer's is the fact that memories are economically sensitive. So, memory in computers, economically sensitive. Your memory, well, if you don't remember, don't worry about it. Just make a new friend every day. It's all good. Outside of that, we are seeing, some other instances. One thing I wanted to bring up, a story that's interesting, is Tesla, of course, is now under potential criminal investigation by the DOJ and SEC for his tweets about this. But a couple of stories that have flown under the radar for the last couple of days in regards to Tesla have simply been that Audi has now come out and they said, hey, we're going to produce an all-electric car starting next year. And their best line was, and we have the ability to produce them. Volkswagen also coming out yesterday. They're going to introduce 3 new cars in terms of all-electric as well. So Tesla's obviously got a real challenge ahead of them coming up, not just from the SEC, but also really from competition globally. But again, the market has become very speculative as of late. And the reason I'm talking about Tesla is Tesla is a good example of speculative nature. I mean, the fundamental structure of Tesla simply isn't there, but yet traders keep buying the stock because it's a momentum stock. One of the big movers of the last couple of days has been Tilray, which has been all over the board. Again, that is just a sign of speculative nature, speculative frenzy in the markets. Those are the things that we see in very late stage bull markets where there is no substance or no expectation of risk. In other words, it doesn't matter what I buy, it just goes up, and the faster it goes up, even the better is the case. But again, remember, as investors, our job is to buy value, because what we pay today is the value that we get tomorrow. So when we become devoid of the idea of value investing and not paying a fair price for the investments that we're making, and are willing to take a speculative risk on our investments, the odds are, and historically been proven, is that future returns are not going to work out well. So again, when we start looking at where this market's being driven right now, it's in some of the more speculative names. That's okay because we're in a momentum-driven market. Just understand that this is a very late-stage cycle of the market, and with narrowing breadth, narrowing activity, of course, rising interest rates, of course, federal banks, the Federal Reserve, as well as central banks globally, starting to tighten monetary policy, reduce liquidity. And back to the fact that rising interest rates are occurring all across the market. That means higher, we talked about this yesterday, higher mortgage payments, higher credit card payments, higher car payments. That all ultimately erodes into weaker economic growth. So while we're watching this now and enjoying this breakout, just understand that this is a later stage cycle. Pay attention to the risk you're taking. Have stop loss and a strategy in place to help protect your downside risk, because when it occurs, it will occur quickly, because there's going to be a real lack of liquidity in the market because of the fact we've got so many ETFs, people chasing ETFs, using ETFs, which have a liquidity issue across the broader spectrum of the market. And this is something we'll talk about soon in more detail, but pay attention to that. When we come back, talking about investing in savings. Booming stock market, all-time high. That means everybody's rich, right? Everybody's making money. This is going to be fantastic for America's economy. But when we come back, we'll talk about the other side of this coin with America's retirement savings. That's coming up next on the Lance Roberts Show, right here on the Voice of Texas.